All right, welcome back. Now we have the Q&A segment of this recording. All right, the floor and the mic is yours, guys. AB, you had a question. We can start off with you, brother. Let's talk. What's going on? And I'll get to the chat after, guys.
Sure. Actually, bro, do you know when it come to, do you know the direction and the condition, right?
Direction and condition, yes.
Yeah, we understand if the medium inducement happen in Asia,
hmm
so that's pro-trend continuation, right?
If the medium inducement happens during Asia, are
Yeah.
we taking a are we supposed to be taking a pro trend continuation?
Yeah.
Okay. So you can't look at it just off of that thought process because the medium inducement could happen in Asia, but it could happen when after Asia created the pro trend move. In this case, you can see it right here. Medium inducement during Asia. Asia took this high, called this medium inducement right here. When London came in, London was a continuation, but this wasn't pro trend. This was just to fulfill the retracement, and then price continued approaching again. So the reason I say you don't want to just look at it at on a general scale of, oh, medium inducement happened in Asia, I'm taking a approach trend continuation. You have to dissect it. You're taking a counter trend retracement because right now price the market is a bullish market. You having low, high, you having breaks of structure, low, high, you're having breaks of structure to the bullish side. So until this low is broke, with a body and price comes here and gives you a trade that's reacting to go bearish, right? Somewhere here, until you catch a trade right here that's doing this, because you broke underneath this, then you can say you're in pro trend continuation because now you've had a medium inducement in Asia, you had a mitigation, and now price is selling off to come do what? Create a new leg. Now you can say you're pro trend because you're BOSing again because this is the new trend, right? Retrace, it'll continue that. But if that's not what you're getting, you're having price being bullish right now and it gave you your Asia medium inducement, and now you're thinking, oh, this is pro trend, so we must be coming to go down here. You end up getting stopped out on this turnaround. You get me? So that's the reason why you don't want to think that. So if that gives you a general context, the specific answer to that question is if is to know what type of direction you're taking the trade from. Is it after the new trend, like in this case, like a 15-minute trend has been established and you know you're still bullish, retracing, or have you reached the premium level or a discount depending on the overall direction? And is the market now giving you a reaction to go back the other way? And it came off of Asia having a medium inducement, London opening up, and you're now saying, yes, I'm aware. I'm leaving from a premium level to come create a new leg to the downside. Therefore, I'm taking pro trend continuations because I'm now back on the pro trend horse. You get it? Versus the horse I was on when I was retracing to go back up. That was the trend then, but that was a counter pro trend. So I'm still counter retracing, but I'm taking the pro trend of that retracement, which is the legs that's causing the BOS. Like this one, this is the counter pro trend, right? This is pro trend in the internal. These are pro trend internally. But once we reach here, this became the new pro trend because now look, we've broke underneath this. So now anything like this to down, now I'm taking pro trend again because I know I'm in a premium level from up here. I'm in a premium level and price has broken underneath the low that led to that high. So now I can say I'm on a pro trend and you can add that to your Asia inducements and stuff like that. Did I answer your question?
Yeah, and then one more last question. What is it called? Do you know, every day, whenever we open our chat, do we have to start always from the daily?
Heck
Or
no,
once we, huh?
you don't. You,
Okay.
you you
So what
do
time frame do you,
you do only if you need to know something.
okay.
Meaning, if you need to know something like, am I in a daily demand? Am I in a daily supply? Then you go to the daily quickly. You just look at it. Say, okay, wait, where am I on a daily? If you forget, wait, where is this main push coming from? You can quickly go to the daily. Oh, okay, I can see I had a daily major inducement up here, price induced, it led to a BOS, price came into that entire POI. You're gonna see I like marking POIs more so than order blocks because the order blocks is more so if I'm gonna mark them, it's gonna be because they cause something. But you want to have POIs because you understand where price is leaving from. So you don't need to go to the daily unless you're looking for two things. Am I coming from a daily supply or demand, or did I just take a previous day high or low? If you're not able to identify that by your sessions indicator, if you're able to understand the session starts with Asia, it ends with New York, and you have the sessions indicator already on your screen. Think about this, guys. You have the sessions indicator already on your screen. Do you need to actually jump on the daily time frame to find where your daily higher nearest daily higher low is? Why? No. If I know Asia started it, all I gotta do is look for the next Asia. If this is a New York, and I'm like, okay, well, Asia's right here. This was that day. Anything above here, anything underneath here was previous day. You can literally look at the sessions and use that as your previous day high or lows. So that avoids having to jump to the daily because that's the only time I go to the daily. See if I'm inside of a previous day structural high or low, demand or, I mean demand or supply, or the inducement. If I've taken a previous day inducement, which means I can expect the opposite momentum, and how I took it, of course. And did I take it with a body or a wick, and how much of the body? That's where candlestick anatomy comes into play. You kind of pay attention to little details like that. I mean, you see a meteor of a candle like this going into the zone. Let me close this. You see a meteor bullish candle like this coming into the zone. Of course, you're gonna think the zone is gonna fail. But when you see the zone gives you a reaction that tells you change of characteristics of structure, you know this was just all invitation of early buyers. So you can kind of narrate to that. So I don't want to run on with the question, but hope that answered that one for you.
Yeah, 100% it does. But like, there's always the one thing that I'm confused about. Do you know, like, what is it called? Because okay, do you see where that circle is? Where the first one on your left hand side?
Circle. This one.
Yeah, do you know where the trend line is? So yeah, exactly.
Yes.
So
This trend
do you
line.
know, like, I always ask myself, where is price coming from? So do I have to go back all the way down, or do I just go from that where you circle that this is a high, that later low? I mean, this that. So where do I start from? Where do I ask myself, okay, where
You,
does price coming from?
you want to use 15-minute swings and 1 hour swings. So if the 15 minutes looks complicated because this looks like a consolidation range, it's just going left and right, right? Just like this. You're just doing it on a higher side of the level. If you're seeing stuff like this and it's like, okay, 15 minutes looks too complex, go to the 1 hour. The swing looks a lot cleaner. Why? Because now you can easily see, oh yeah, this was the last swing low that led to, because this was the high it came from, the last higher high. Before this higher high got broken, this was the low it created. Okay, what did that low, the swing level it left? Up here. Okay, but we're not gonna jump all the way up here yet. We're gonna say the last high it broke, which is this one. Then this one did this one. Then this one did this one. So now you can say, okay, this is complete. This area right here is complete from this swing low to this swing high. Now I'm dealing with this one. The reason I'm showing this is the simple, if you can't figure out which zone to pay attention to, find the most recent swings and look where it led to. Did it reach 50%? Oh no, it didn't. And you're so happen to be within that time session, and price didn't is not already all the way up here, creating new swing highs and lows. Then you say, okay, this is most likely where the liquidity is either going to come park and start building liquidity here to then induce to hit this and go, or this is where it's going to come take all of this. But you don't need to know it all. You just need to know where the next stop could possibly be, which would be where the 50% wasn't retested yet, right? And that's all you need to know. That's all I focus on after I come into the session. When I've already been reading this price narrative for the whole week, whole month, you've already been trading this pair. So you guys should be able to follow along what it already came from, what's it doing, and keep that memory if you're showing up every day to the market, or at least finish your days if you can't trade, looking over the market to see what happened to continue your memory on price action. All right. Any other questions, guys? So that way I can get to some of the ones that were in the chat. Actually, let me
Yeah,
jump into it. I'm sorry. Let me jump into this one. It was a very asked question. This is the break and retest. Very quickly, I'm gonna go through this one. That was something that was asked. Break and retest. One of our brothers. The way you was marking your break and retest, you were using the structure that needs to be induced as your form of retest. In this case, you were saying something like this price coming back to something like this is break and retest. When price comes in, retest this level and push again, you call that break and retest. What we call that is retail support and resistance, right? The break, it has to be a break of a high. So if price, in this case, let's go to an actual break and retest level where I've marked, let's look internally here. A perfect one we could use. I'm gonna use because two of them, so you can see it back to back examples. I don't want to spend too much time on this one. You can see here, this was an internal high, this was a low, it led to that broke. When this was a breakup structure, see how price came back right on top of the level. Imagine this as like an imaginary flare. It became a demand. So this was a supply. Now the supply becomes a demand. Price reacts from it. That's when it becomes a level of break and retest that needs to be induced before price creates the next BOS of the big move, right? So that's kind of how you see it. So that's where you want to look at for break and retest, because here's the second one that happened. Price came back again on this side. This was a low that led to this high that broke above this high. Why not this one? Because this was internal. But when price broke above it, look what it did. You can see these wicks. I'll zoom in. You can see these wicks right here where price respected it right here. Respect, respect, and then built trend line. Break and retest. It's not from this wick to here, and we saying this is the break and retest. No, it's from the outside, breaking, having price break through it, coming back, respecting it at a 50% or higher level, and then push again. Then we know price has to come back and induce it before making another move up. All right, that's the answer to that question. All right, next question. So while we're still on the time.
Can I ask you a quick question, please? Are
Yes,
you able to mark? You know how you marked on a pistol from high to low and on in the 1 hour?
you're very close to the mic. You sounded muffled. Could you repeat that?
Can you hear me now?
Yes,
Um,
I think
you know
so.
how you marked the low to high using a pistol? Are you able to mark it again, please?
Ooh, that was hard to hear you. You said the low to high. Is it
On
me?
the 1 hour.
Anybody else hear her muffled? No? It's in my headphones.
It must be a headphone.
Yeah, I think so. Okay, I'll try to understand. Go ahead. Go slow for me this time.
Uh, it is a little bit muffled, sorry.
Okay.
Um, okay, I'll just type it. Oh,
Okay.
do you know the high to low to the left?
The high to the low to the left. Okay. This high.
Yeah,
Is it this
Nyla typed it for me. Thank
this
you.
high?
No, the below high. You know how you're waiting for the 50%?
Oh, what we're just looking at the break and retest level?
Yeah, because I would have stopped the high to low there. That's why I
Here.
got confused.
Here.
Yeah, that low led to
Uh-huh.
that.
Uh-huh. Yeah, this was during the London, the New York and London transition. This area, yeah?
Yeah, you use the fib tool to mark it, right? Are you able to remark it again?
With the fib.
Yeah.
Yes, 50% right here.
Oh, so you're waiting for it to come back all the way down there.
Yes, because this is where the premium, the discount level is. And look, what happens to be here? A huge imbalance. What's underneath it? A order block. You know what I mean? So if anything, we want to see price in these discounted areas to buy up if this was to come and give us an entry after this move right here. After this BOS happened, New York opening for me, if it doesn't come to here, I didn't enter this because to me, you're over 50%. This is a liquidity level. You're buying with break and retest traders. Yes, you might have said, well, I'm taking this buy because there's this huge imbalance that price did right here that needs to be filled up. Okay, so you got away with an easy one. Yeah, price just gave you an easy one because you already know this needs to be filled. So yeah, you could have taken it with them, but I'm not gonna take something like that because that's not a you don't want to make practice of taking trades that price is giving you as bait. Yeah, sometimes you might have caught the cheese, but other times it's gonna catch you and you're gonna fake a turnaround and take you out, or you might have held for higher levels and price didn't go all the way here. It just closed the gap and then dumps after that. So risky. Hope that answered your question.
Yeah, thank you. I've
Yep.
got another question in the chat if you do have time, if you
In
can,
the
please.
chat. Let's quickly look. Oh yes, there is question in chat. Can you load a high? Okay, fib. So let's say price goes below, then it's not break and retest. Oh yeah, so if price goes underneath it, right? So the break and retest. So let's see right here how price retested it. If this was to do this and then dip like this hit this inducement and then start pushing out, this is complete. The break and retest is complete. It already retested it and mitigated something, and now it's breaking out to do a BOS. It doesn't need to come back here no more. The liquidity cycle is complete from right here. But because it didn't break and it invited these liquidity traders here and it didn't take them out, the liquidity cycle is not done. That's what you have to understand. Once the liquidity is built, then gets taken out, you can look at it like the trash was taken out. There's no more trash left here. If there is, it's just a small amount, just this trend line and this smart money trap. That's about it. But is it needed? But because price didn't take it, because if it would have came down lower and did this would have been gone. It would have only been a trend line. Or maybe it would have induced here and tapped into this demand, because this is where everything started to lead all the way up to here anyways. So this could have been the inducement that push out. So all of that is all about time and being timing with the market. Next question on this was, I'm trying to be with the time frame of this so I can get to everybody's question. If you could kindly go through the USD. I might not be able to do USD JPY because that would require me to do a whole analysis. I haven't been paying attention to the pair since I brought it up on the TPC Zoom call. I get caught up in a lot and overcomplicated. My bro, can you go through break and retest? Okay, that's the one I just went over. So I hope that gave you some understanding, AB, with the break and retest. There was a question in the Discord that was asked. I wanted to answer it. He says, how do you distinguish a genuine minor inducement from just a normal price noise? Is there a structural rule or is it purely contextual? What does he mean by that, guys? Minor inducement. So he's talking about minor time frames, 5 minutes, 3 minutes, not 15-minute inducements. And the question is, how do you know when one of those inducements is a significant one and when if it's just price action building liquidity? How you know is simply, did it lead to something? This right here is a minor inducement. Price induced this equal high. Did it lead to a BOS? No, it did not break underneath this yet. But when it retraced, did another retest and push down here, it became relevant. So when price come back to that zone, it can give a reaction out of it. But a collection of minor inducements, a collection of them, led to a breakup structure, which now makes the zone valid. But if it did not lead to anything, you cannot say it's a minor inducement. Let's take it even lower levels, so like the 1 minute, because the 1 minute is where you're going to see a lot more minor inducements. Let's look in this area, for example. Perfect situation, liquidity level. We had this low, this low led to that high up there. Price came back, gave us, what's going on? Price came back here, gave us a minor inducement, and pushed out all the way until it broke here. But it didn't do it in one move. It pushed out, came back, retest this zone, pushed out again, caused a breakup structure, came back down, give us another minor inducement here to push out. What is these push outs doing? They're causing breaks of structure. Then they give us another minor inducement here while mitigating this demand to then push out, break structure here and here, come back, use this demand as another liquidity to go deeper into this level to then push out again. A bunch of minor inducements that's leading to breaks of structures is what leads price to make a move that's going to cause the BOS. And that's the reason why I tell you guys, when you're looking at time frames like the 1 minute, pay attention to the swings of them. Don't get too caught up in these internal ones. And that's when you're looking for your entry model. Price has reached your zone. The system that we look at it as in smart money concept, you can refine it to be so stress-free for you by simply understanding your key zones where you're likely to get the highest price action. You have the highest probability. You know a trade from here. Okay, yes, you could possibly predict that it would take this high and you ended up hitting TP from it. Okay, cool. But you know a trade out of here from a zone you've marked as a significant high, you know a trade out of here is going to give you a home run. So there's no need to try to fight for these little low-hanging fruits, is what I call them. They're low-hanging fruit trades because they're happening on a daily to try to finesse people. But these is where the big players are doing it. The big money's involved because they know this is an area. All it's going to do is how patient can you be when price mitigates this significant zone to catch the right entry, which you guys know how to do. Two-leg protocols, change of character, breaks of structures. If you would have waited for that, right? You had change of character, break of structure, retest of a premium level. It was all obvious to everyone that you could have taken this trade for those of us who took it. So you know what I mean? It's all about settling for what has the highest level of probability. Any trade will tell you. Azam, you have a question, brother?
Yeah, bro, but you just explained the majority of it, to be honest, because I did take the same trade, but I took it on GU,
Yeah.
and my TP zone was early. Like, I think
Mm.
fully it ran for like a 1 to 16,
You
but I
probably
got out like
targeted
a 1 to
this
5.
demand. You
Yeah,
target this demand.
exactly. That's exactly what I did.
Yeah, that's the smart
Um,
money trap because we
yeah,
already coming from a supply, right? Yep, yep.
because like I seen all the liquidity got swept. However, like for some reason in my brain, I was always like, just get out the
Mm,
earliest place you could possibly see a reaction. So I
yeah,
was like, you know what? Let me just target this quick, easy
yeah,
trade. But then, unrealized gains. I was like, damn.
yeah.
Especially after you put on your story, you was like, why not him? I was like, damn, why not him?
Right. Why not
So
this
yeah,
trade?
man.
Especially if you're looking at this swing
Missed out.
here, you might have looked at it and it validates what you were thinking. Because look, if you did it from this swing to this high, you could see this was in discounted area. But why would you not consider to use this as a swing? Because if you mark your liquidity ranges, you'll know, yeah, this not going to be no true structural range that I could say price left from this low to this high. There's liquidity underneath it. It's a consolidation low. It's a trend line here, trend line there. So I'm not going to look at this as a range. If anything, maybe I'll look at this one as a range, but then this one has the same thing. So if I already say price would need to come to this level as what would be now considered discount, but there's liquidity there, then that must not be the proper range. And that's when I would keep making me adjust my range. This is not it. Now I would keep adjusting my range. I keep going on higher time frame until the range makes sense, where it would clear up liquidity. So I'm happy it answered that question, bro, for you
Yeah, bro.
without
Yep.
knowing. It's another question before someone else speaks up on is within this message. It says, how do you handle order blocks that has been partially mitigated, got wicked into early, or is a partial tap enough to call it used, or does it remain valid until it's engulfed? That's another good question because here we have the same thing happen here where I took my trade. This is an order block, right? This level was an order block that was already mitigated when I had it first mark. Remember, I said it was this entire zone. But before price came all the way back here, this was a mitigated zone. This was the mitigation, right? And look at the mitigation. It was a small percentage of it. Even if we don't even use the swing high of it, let's say we just use this one. Price mitigated here. So this we can see is not 50%. 50% of this level is about right here. So we can say this is about 20, 30%. And then this would be like 786, and those higher levels are 100%. So we know that there's still higher levels above this low that price can mitigate deeper in because this swing high that led to this low that caused these big BOSs of these types of levels of the low that led to the swing, the mitigations up there. This was a retracement of it, and now it's broken under. I can say, okay, this is a premium level that can hold, and if price comes, it's gonna do that. So how do we, to clarify the question, how do we handle an order block like that? So what we do is exactly what I showed you guys earlier. You mark out the part that was induced where the mitigation happened. You don't continue to hold this and try to predict how deep it's going to go. You simply say this is now your inducement of a structural high that needs to be taken to mitigate in here somewhere and give you a reaction of your entry models, your two legs, your impulse candle setup, or your change of character break of structure for you to sell that market, or if it was a buy, for you to buy that market. That's all you have to do for those types of order blocks. All right. One more question from his, and I'll take another one of you guys' questions. I had a situation where medium inducement. I don't think this was a question. What is the easiest way of knowing whether you're liquidity in the market? Okay, what is the easiest way of knowing whether you are liquidity in the market? My most common stop losses have been me being induced because price wanted to mitigate a zone deeper than what confirmed. So pretty much what I showed you guys earlier when it came to that medium inducement. Sometimes you have two medium inducements resting next to each other. You can't expect that price is only going to take one, as we looked at the one that we had down here, where we had the swing Asia low, but then next to it we had the London and New York high. We can't see those types of structures and tell ourselves, oh, price is only going to take this one and leave the other one, especially when they're that close. So price is most likely going to react off of one and then take the second one. So you want to pay attention to your surroundings. That's what I would say. Pay attention to the liquidity around your surroundings to avoid being in the early buyer's trap. Always look for early buyer's traps. All right. Any other questions? Just to confirm, it's fixed practice to completely avoid any opportunity that lies within break and retest. Even if you see a zone imbalance, such as examples you showed, we should completely avoid regardless. I'm not saying that it is fixed practice. I would practice that. It's very case by case scenario. In a situation like that consolidation zone we just looked at, you could see price still went bullish. It still created a bullish move for whomever would have taken that trade inside of the consolidation break and retest level right here. Whoever took that trade, who could have taken that trade during London, going to the New York opening, for example, these right here, they would have probably hit TP, right? But for me, I would not take it because I'm like, this is a lower hanging fruit. It's a lower hanging trade of me not needing to take when I know I have this big basket that's going to give me a much better move. So it's your choice of greed. If it's asking me for my personal opinion, yes, I would avoid them, especially when I see an order block underneath it. That price can induce the 50% level to mitigate, and it doesn't do it. I just avoid the trade, let it go. It wasn't for me. Clear. Hope that answered the question. Any other question? Guys, if you have a question, feel free to unmute the mic while I look into the next question on here. Okay, something about I just never understood. Okay, the smart money trap thing, and I kind of said it earlier briefly. The question was, smart money traps. I never understood how, because price failed to mitigate an order block, it becomes a smart money trap. So when price does eventually mitigate, expect a minor reaction, then to be taken out. I need a proper dumbed down way to understand smart money trap properly because I feel like I get trapped often. Yes, so it's like we one thing we already know is invalidation models. Price came to, what was it? I think it was like last week's zone or something. If price did not tap into the demand, or was it somewhere here? Price did not tap into this demand right here, and it pushed off. So I know this is a smart money trap, for example, and there's an imbalance underneath it. Why would I say this is a smart money trap when price did not mitigate it? The fact is, price left without mitigating it to mitigate a supply instead. So we already know this is now invalidation model. A supply was mitigated before the demand, so the demand will fail, or vice versa. Well, what about when price does mitigate a demand? How do we know when it's going to react and still be taken out? It will be same way, but internally, right? Price will mitigate the demand. In this situation, let's find a perfect example. Price will mitigate the demand. Let's say, for example, this demand. Price pushed out, BOS, came back, did not come to any supply in the premium level yet, came back, did an inducement, mitigated this supply after mitigating this demand. So you're like, wait, why did price do that? Look at all these supplies price had mitigated already before coming to this demand. It mitigated this one. Then it broke structure again. Then tap into this demand to invite these buyers in because they're not paying attention to here. They're looking at breakup structure, this supply gonna fail, and they're just waiting for price to come here without reading context of this low did not mitigate you here. It pushed back up, did not break underneath the range, pushed back up, mitigated this supply. Now you're in trouble. Break structure, invite you, mitigated another supply, take you out, and then the real move happened. So that's how you can kind of differentiate the difference of the two. When you do get mitigated and you're gonna be a part of an early buyer's trap, like a smart money trap like this, or when you're gonna get taken out as a smart money trap, these are more taken out by aggressive people who trade aggressive entry. If you take aggressive entry, these are the ones that you're more likely going to get taken out of. The one where price did not mitigate your level, and then it pushes away and comes back. We got 10 minutes left on this one, guys. When price pushes away and comes back, most people are expecting this reaction and take off because they're treating it like this, the internal. They're treating it like internal price actions. When price creates the break, retest, comes back, taps into the retest, take out the retest level, mitigate, and push out. That's what they're treating it like. So they're expecting this becomes the break, price comes and does this level, and then mitigate strong in here and sell off, same way we do here. But the difference is what? We didn't just sell off once price is tapped here. That's why I say it's most likely traders who trade aggressively that would get taken out in these types of setups is because they're taking the trade at the tap. What did we do differently? We waited for the confirmation of our entry model. And when we got that, we then entered the sell. And that's how we were able to avoid getting taken out of a zone like this. Because if this never gave us our entry model right here, we would have never entered. We would have just waited. It could have consolidated like this the whole session, all the way till it broke it. And guess what? That would have changed the narrative of this level, and we would have looked for higher levels for where price can start to sell from. That's all. That's literally all it is. You don't have to change your whole overall objective. You just start to try to look the market differently. All right. So hope that answered that last question about the smart money traps. Any other questions, please?
I have a question.
Yes.
So can you hear me? Can you go to GU quick? GU.
GU. Yeah. Let's jump over to GU. Yes.
So can you use a vertical line and mark Monday's price action? Vertical line.
Monday.
Yeah.
Yes. Hold on, let me find Monday. Monday will be right here. What's the question?
Yeah. So look. So can you mark the demand where price gave a reaction and swept previous daily high?
A demand where price took a previous daily high?
Yeah. That reaction, that sharp reaction, you could see it.
What session? New York or London?
It was basically on London, and then New York gave a reversal.
Okay, so
It
New
was
York
on Friday.
gave a
It was based on
reversal.
Friday. It was based
So-
on Friday.
From Friday, previous day, from the previous Friday of this week or last week?
This week.
Okay, so this
Yeah.
Friday, like this Friday of yesterday.
Yeah.
Okay, so yes, what's the problem on GU? You want to
So,
see what we had this inducement. So GU looks like it when it did the inducement, it mitigate. This was your medium inducement, previous day highs. Okay, what did it reach? Let's try to
So,
do this. I'm just gonna mark a line right here. Go ahead with your question. If I didn't get the question, go ahead.
so look, right. So I was looking for sales during London session, right? During London session, but then I noticed price step into a demand level where on the 15 price it was it had trend line trades in. It was entitled to trend line, so I knew it was SMT. So I thought that maybe price can use it as a while tapping the demand level, it can use it for a reaction to tap into my order block and give me a low type of confirmation to sell off. But then later on, when I took aggressive in because I saw a POI were aligned with my purple range. So I took aggressive entry. Then I noticed price just stopped me out immediately.
Okay, no worries.
If you understand the question.
I do. I think I do, but I'll quickly what I just did. If you've seen any of it, is this right here. Quickly, what happened in London? We could jump to the quick 15-minute. Look at it from the
Yeah, the
screen.
15 would be better.
We can see right here. We had a structure high. This high led to this low, broke structure. Price give you a medium inducement of these internal highs, and then mitigate into this demand. It also did this consolidation range right here, where it took the high, an inducement, took the low, came back to do the inducement. Now it's ready to sell off. Why would it sell off? Because you have all this liquidity here that was not retested yet. You have another pool of liquidity here that was not retested yet. You have a consolidation range right here that the low has not been taken yet. So you have all the reasons to see why sales need to be fulfilled in this area. Okay, so when this price gives me a medium inducement, taps into a supply like this, that led to something, and I know there must be a reaction because we should at least fill up. Even if we don't come all the way here, we should at least fill up premium of levels of here before we do this again, right? So make the market has to look structurally compliant. So what do? Once we get this mitigation, we just go straight to the 1 minute in our key time window, which this happened to be during New York. London did the final mitigation. So New York opens here at 9. Let me see. Right, New York opens up doing the inducement of the previous day again. So what do you get? 2-leg protocol, or do you get internal price action? So perfect. Price gave you, let's use this. Price gave you 1 to the downside. This was the internal low that led to this side. So this is change of character. It retraced here, did not come higher, give you another BOS. That's 2-leg. So now all you need is to say, okay, from this high to this low, 50% is up here. 50% is at this level, and then 618 is at this level. So if price needs to come above 50%, then I'm going to say, okay, what liquidity is resting at 50% level that price needs to take before I can take into the straight. So I'll zoom in because I'm still on a 1 minute. I could see right here, there's a 1 minute supply from this low to this high. That was the one that caused this break. This was the internal high from this high to this low to this internal high to this low that broke this low that led to this high, this low from this high that led to this retracement that caused this break that broke above, right? Break and retest traders got invited here, price pushed out, took them out. Induce this level, consolidated, give you another structure. So now I need this level to be taken, equal highs to be taken. I need this internal structure here to be taken because these are all now liquidity. And we got about 5 minutes left. I need all of this to be liquidity taken to do what? Tapped into this supply that I see price created, which was not mitigated. If I wanted to be more refined, I could put it like this on this level. So this would become my entry for GU. If I was trading GU, I would have literally sold from here, and I would say, well, where's my target? I'm gonna first because I'm coming from a medium inducement, I need to target medium inducement because that's where price is gonna reverse from. All right, the next medium inducement, I can't stop right here because this is trend line. So I know this is liquidity. Go down to this level. So the next medium inducement becomes this Frankfurt low / London low. If I look to the left, is there any other medium inducement? I'll go to the 5 minute. No more other medium inducement. Then this will become my TP level because the next medium inducement, I have to be careful because look, this is a demand. What happened in this demand? It didn't get mitigated. And what's underneath it? We have about 3 minutes. What's underneath it? A structural low that led to something and it wasn't induced yet. See, this structural low right here led to this high and broke above this high. And price came back, breaking retest traders, left, got induced right here, but this is now liquidity and this is now liquidity. A huge pool of liquidity is that because this is now what you call retail support and resistance. Look at all the time price been here. So you got this big pool of retail support and resistance that needs to be taken out, and you have a sweet demand underneath it that can give a reaction, but not to reverse the market because look where it's at. There's all this liquidity underneath it, but it's just a reaction for price to be able to turn around and invite early buyers and then take them out and continue. So that's that answer for the GU. This is where I would have entered from if I traded GU that session. Price did exactly what we talked about, came into a higher time frame, gave us a medium inducement on a 15-minute, had a structural high to see price take before the medium inducement happened, which is this high right here. Took all of this high right here during London. But guess what? It didn't give us a mitigation yet because it was short of this supply. See, it didn't tap it right here. Price didn't mitigate it. Instead, it did consolidation. Then it did an inducement here, push down to fulfill this retracement. If my session opens up is doing this, and I get a medium inducement and it gives me an entry model, yeah, I'm selling to come take the level out. All right. If I didn't get to your questions, guys, please, yes, he usually does. Please send it in the messages in the questions tab. I'll spend some time and kind of get to them and give you guys an audio response if it's too much to text. And just kind of get back to you there. I'm trying to keep the videos at a time frame because I'm being mindful of you guys' time when rewatching it. So you don't spend too much time watching hour-long videos because your mind can't process the information when it's so long. So these quick 30 minutes, 40 minutes video cuts are good that you can watch a quick 20-minute, take a break, or 15-minute, take a break, come back after 5-10 minutes and pump out the rest, and you can get the information. So I'll try to keep it like that for you guys. And it also forced me to get to the point in a shorter amount of time. So work with me, drop your questions in the questions tab. If I didn't get to it tonight, I hope you found some decent value from this. And I hope we can do this again in the future, yeah? And have more of these calls, guys. Thank you, guys. Thank you, Tamika. Thank you, Aisha. Thank you, Naila. Thank you, guys. I see your message on that. So yes, video's gonna call anytime now. So whenever it cuts, hey, feel free to exit. And I'll upload these videos tonight. I'll upload them on YouTube, and then I'll put all the texts and stuff like that, cover arts, and then get them on the server. Oh, I got all that word in. It didn't cut off on me yet. That's a long minute. Y'all have a good night, man. Peace. I'm trying to get it cut off on the right time.